the crypto markets in May 2025. Think less predictable puddle, more roaring rapid. Bitcoin's just punched through $100,000 again.
Yeah.
Ethereum's pulled off this, well, dizzying climb. And the rule book.
Of the rule book.
Let's just say it's being rewritten on the fly.
Exactly. And, to navigate this whirlwind, we've assembled a pretty fascinating set of sources. We're diving into market analysis, predictions from Forbes, Cointelegraph.
Right.
Getting granular on regulatory shifts, thanks to Thomson Reuters.
Yeah.
Tapping into the pulse, the community feel on Reddit's cryptocurrency.
The old Reddit.
Always. Looking at the cold, hard facts of hacks from Crystal Intelligence and getting that current market snapshot from Presto Research.
So our mission is clear. Cut through the noise, pinpoint the pivotal events, dissect those head-turning price swings, decode the latest regulatory moves, and just get a feel for what the sharpest minds are forecasting right now. Okay, let's unpack this. Starting with the OG, Bitcoin. Breaking $100,000, first time since February. That's a statement.
It certainly is. And it's definitely fueled a resurgence of, bullish sentiment. Forbes mentioned a rare Bitcoin price prediction from David Sachs.
Conscriptos are, yeah.
Often called that, yes. Though the specifics weren't actually shared in the article. But maybe more concretely, Horizon SLJ Capital. They flagged a potential $2.5 trillion avalanche aimed at the U.S. dollar.
An avalanche of dollars. What's the worry there? What does that mean?
Well, the concern really arises from the sheer volume of liquid dollar holdings globally.
Right.
Factor in anticipated interest rate cuts by the Fed.
Okay.
And the potential for a strong economic recovery in China. And you get this scenario where a weakening dollar could drive investors toward, alternative stores of value.
Like Bitcoin.
Exactly. This line of thinking suggests Bitcoin could eventually approach gold's market cap, which is around, $20 trillion?
Wow, 20 trillion.
Yeah. So while you have this strong institutional narrative building, that low public conviction we'll touch on later. Well, it could temper expectations for, truly parabolic growth, at least short to medium term.
And here's where it gets really interesting. When you consider the global stage, Trump hinting at easing tariffs on China, followed by these U.S.-China trade talks in Geneva, it feels like the crypto market is just glued to the news ticker on this.
Absolutely. The Presto Research brief really underscores how sensitive the overall risk-on mood is to how these talks go.
Right.
Any hint of easing tensions could propel further rallies. But, renewed friction could quickly dampen enthusiasm.
Makes sense.
And actually, building on that prediction from Sachs, if we zoom out a bit, Horizon SLJ Capital highlighted this potential systemic risk.
The avalanche you meant.
That's the one, the potential dollar weakening scenario.
And speak of enthusiasm, Jeff Kendrick at Standard Chartered Bank. He's definitely feeling it. Revised his Bitcoin outlook upwards, even suggesting his $120,000 target might be too low.
Yeah, he's pretty bullish right now. Kendrick points to a really powerful combination of factors. You've got consistent, strong inflows into the Bitcoin spot ETFs.
The ones holding actual Bitcoin?
Exactly. Then there's growing interest from U.S. state treasuries looking to allocate to Bitcoin.
State treasuries. Really?
Yeah, that's a newer development. And even initial moves by sovereign wealth funds and pension funds exploring Bitcoin. These are significant institutional tailwinds.
Then you have Bill Miller IV really making waves. Prediction of Bitcoin hitting $1 million.
Yeah.
And overtaking gold's market cap. That's bold.
It is. It really is.
Yeah.
But his rationale centers on what he calls Bitcoin's functional superiority over traditional fiat currencies, meaning its finite supply acts as this natural hedge against inflationary policies. He sees it as just a more robust long-term store of value compared to government-issued currencies.
Okay, so with all this bullishness swirling around, it's easy to think everyone's sold on Bitcoin's future, right?
You think so?
But then you see this Reddit thread pointing out that only 4% of U.S. adults see Bitcoin as the best long-term investment. Compare that to gold at 23%. Real estate, Bitcoin's way down. It makes you wonder if we're still really early.
That's such a critical point. A necessary reality check, really. While institutional interest might be gaining serious momentum, widespread public conviction, actual adoption, that still has a significant way to go.
Yeah.
That Reddit sentiment.
Yeah.
It reflects a potential gap between the, let's say, fervent belief within the crypto community and how the broader public perceives Bitcoin's long-term value.
And it's not just external views. Michael Saylor, right, perennial Bitcoin bull, he's quoted on Reddit suggesting that short-term holders are actually hindering Bitcoin from reaching $150,000.
That's an interesting angle, isn't it?
Yeah, the idea that a lack of long-term commitment is holding back the price.
It really speaks to the dynamics of market participants. How different trading behaviors influence price action. If you have a large group of short-term traders, that can introduce more volatility, potentially create selling pressure.
Offsetting the long-term guys.
Exactly, offsetting those longer-term accumulation efforts.
And just to round out the Bitcoin predictions we saw floating around on Reddit, Cathie Wood, still holding firm, $700,000 price target by 2030.
Still holding firm. Yeah, Wood's prediction is rooted in this broader thesis about disruptive innovation, the increasing importance of digital assets in the future global economy. It highlights that long-term conviction some prominent investors still have.
Okay, let's pivot. Ethereum, between May 8th and 9th, a remarkable 29% rally. That kind of move grabs headlines.
Absolutely. Analysis from Cointelegraph suggests this significant upward movement could actually signal the end of a notable bear market for Ethereum.
Really? The end?
Could be. And the liquidation of over $400 million in short ETH futures positions, that indicates a lot of traders were caught betting against this price jump.
Ouch. But despite this huge price action, the demand for spot ETH ETFs, the ones holding actual Ether, seems surprisingly, well, muted.
That's a key observation Cointelegraph highlighted, citing data from far-side investors. Even after this big price jump, spot ETH ETFs kept seeing net outflows.
Outflows, yeah.
It suggests that while the price surged, there wasn't a corresponding flood of new investment through those regulated channels, at least not immediately.
And it seems activity on the network itself might be part of the story. We're seeing reports of an 85% drop in Ethereum network fees, January to April. How does that impact things?
Well, lower network fees. On the one hand, it's great for users, right? Cheaper transactions.
Sure.
But it can also indicate reduced demand for actually using the Ethereum blockchain for transactions, for smart contracts. And this, in turn, affects the rate ETH gets burned, removed from circulation via transaction fees. That can impact supply, potentially demand.
Interesting. And the sentiment in the ETH options markets, described as neutral. Puts and calls trading at similar levels. What does that tell us?
It suggests that despite the recent surge, options traders aren't overwhelmingly leaning bullish or bearish on Ethereum's immediate future.
So kind of a wait and see.
Pretty much. Equal pricing implies a lack of strong conviction either way. Maybe uncertainty, maybe just watching how things settle.
Now, there's this political note Cointelegraph picked up. President Trump apparently distancing himself from a lobbyist pushing for a crypto reserve. And it mentioned he previously name-dropped Solana, Cardano, XRP. Any implications there for Ethereum specifically?
It mostly just underscores the unpredictable nature of political endorsements, Priorities can shift. While he mentioned other altcoins earlier, his more reserved stance now on a digital asset stockpile. It could just be a broader recalibration, not necessarily anti-Ethereum.
But it does show interest beyond just Bitcoin.
Oh, definitely. The earlier mentions indicate an interest in a wider range of digital assets.
Okay, so despite the ETF outflows, the neutral options, Presto Research highlights that Ethereum significantly outperformed Bitcoin overnight. That, 22% jump versus Bitcoin 6%? That's hard to ignore.
Exactly. And Cointelegraph also reminds us of Ethereum's strong fundamental position. Decentralization, total value locked, TVL, at $64 billion. Way higher than competitors like Solana, BNB Chain, Tron combined.
Right, the underlying tech is still dominant.
That underlying strength could eventually translate into more sustained positive price action, regardless of immediate ETF flows.
And just to hammer home that rally point, Reddit users were sharing news from Benzinga. Ethereum surging 25% to $2,400, largest single-day gain in 4 years.
Yeah, so clearly there was substantial positive momentum, even if the ETF market hasn't fully reflected it yet.
Must be other factors driving it then.
And seems likely. Maybe positive developments within the Ethereum ecosystem itself, or just broader market sentiment shifts favoring ETH for a bit.
Okay, let's transition to the ever-present topic. Regulation feels like a constant factor shaping the market's trajectory.
It really is. That Thomson Reuters tax piece highlights the increasing global emphasis on regulating digital asset transactions, combating illicit activities.
The usual suspects: money laundering, fraud, terrorism financing.
Exactly. We're seeing more stringent requirements pop up everywhere. And this increasing scrutiny, the broadening definition of broker, it signals a clear trend. They're bringing crypto under traditional financial reporting frameworks.
Which means more compliance burden.
Definitely. but potentially also legitimizes the asset class for more traditional investors. Double-edged sword.
And in the U.S., the final version of the 2025 Form 1099-DA, finalized now, requires digital asset brokers to report sales. Who exactly falls under this expanded definition of broker?
So the definition has been broadened to include DeFi brokers.
DeFi brokers.
Yeah, basically service providers that facilitate trading on decentralized finance platforms, those front-end services. They'll now be subject to the same information reporting rules as, say, your traditional stockbroker.
But there's some temporary relief for these newer entities.
Yes, IRS Notice 2025-3 provides transitional relief from penalties for certain brokers, specifically those DeFi ones. They might face initial challenges meeting these requirements.
Makes sense.
So this relief applies to sales in 2027, with the first reporting due in 2028. It kind of acknowledges the complexities of implementing these rules in DeFi.
Okay. What about reporting foreign crypto holdings? Do the FBAR rules the report of foreign bank and financial accounts cover that yet?
Not explicitly, no. According to the FinCEN Notice 2022 that Thomson Reuters referenced, the current FBAR regs don't define foreign accounts holding virtual currency as automatically reportable. But
that's always a but.
Always. FinCEN has indicated its intention to propose amendments, so expect virtual currency to be included in future FBAR requirements.
So while FBAR might not apply yet, there's Form 8938. Could crypto holdings trigger that filing?
It's certainly possible. Form 8938 requires U.S. taxpayers to report specified foreign financial assets if they exceed certain thresholds.
Right.
There's an exception for assets held by dealers using mark-to-market accounting, but for the average crypto holder. If your foreign crypto holdings meet the reporting threshold, yeah, you might need to file Form 8938.
We also saw President Trump issue an executive order earlier this year, establishing the Presidential Working Group on Digital Asset Markets. What's the main goal there?
The primary objective is to develop a comprehensive federal regulatory framework for digital assets. That includes stablecoins, and even exploring the potential for a national digital assets stockpile.
The stockpile? Interesting.
Yeah, it signifies a high level of government attention being paid to the future regulatory landscape for crypto in the U.S.
And of course, the SEC. Always active. Strong focus on protecting investors. What specific areas are they scrutinizing most closely right now?
The SEC's Crypto Assets and Cyber Unit is actively investigating potential securities law violations across a pretty broad spectrum. We're talking ICOs, exchanges, lending, and staking products.
The whole gamut.
Pretty much. DeFi platforms, NFTs, stablecoins. And they're also paying close attention to cybersecurity practices within the industry.
It still sounds like a bit of a patchwork system in the U.S., though, right? Individual states doing their own thing.
That's accurate. The lack of uniformity across states creates complexity for crypto businesses, and it can potentially lead to regulatory arbitrage companies setting up shop where the rules seem more favorable.
Now, looking internationally, what are some key regulatory updates happening elsewhere? Major regions?
Okay, so Brazil. The central bank is the main supervisor, focusing on rules to prevent scams, protect consumers. The EU has MiCA markets in crypto assets. That brings in licensing for crypto companies, plus rules on sharing sender beneficiary info for transfers over €1,000 starting January 2026.
That's the travel rule stuff.
Exactly. And verifying ownership of self-hosted wallets for transfers above that threshold, too. China maintains its ban on exchanges, trading, mining.
No change there.
Nope. Japan's Financial Services Agency oversees crypto yuan deals, stricter rules on sharing customer info. South Korea is making progress with its Virtual Asset Users Protection Act. And the UK requires digital currency firms to get authorization from the FCA.
Busy time globally. Interestingly, the World Economic Forum is suggesting new international trade agreements, specifically to enable market access for private digital currency issuers. That sounds very forward-looking.
It is. The WEF sees the growing potential and is pushing for more international cooperation, trying to create a more supportive environment for development and cross-border use, while also tackling risks like AML and consumer protection.
Cointelegraph also reported Paul Atkins' nomination advancing in the Senate Banking Committee, closer to potentially becoming the next SEC chair. Could that signal a change in approach in the U.S.?
It's definitely something to watch closely. A new SEC chair could bring different priorities, different perspectives to crypto regulation. Hard to predict the exact impact yet, though.
And SEC Commissioner Crenshaw voiced concerns about the Ripple settlement potentially creating a regulatory vacuum. That suggests there's still uncertainty, differing opinions even within the SEC.
Yeah, that really highlights the ongoing struggle. How do you clearly define and apply existing securities laws to these novel digital assets? It underscores the need for clearer, more comprehensive rules to give the industry more certainty.
Okay, now let's delve into some broader market trends, significant events that caught our eye. Bitcoin back above $100 is the big headline, and the Presto Research Brief puts Bitcoin dominance at what, 64.52%? That's huge.
It is a big chunk of the market cap. But the brief also points out that altcoins actually outperformed Bitcoin overnight.
Oh, interesting. Why?
A mix of factors, apparently. Trump's UK trade deal announcement, optimistic comments on other deals, the Bank of England cutting rates, all contributed to this broader risk-on sentiment.
Which favored alts this time?
Seems so. Plus, longer-term trends like tokenization of real-world assets and just increased accessibility to altcoins probably played a role too.
We're also seeing interesting moves from more traditional players. Robinhood planning to let Europeans trade U.S. stocks on Solana and Arbitrum. That's a fascinating mix of TradFi and blockchain.
Exactly. And Superstate launching Opening Bell, a platform for issuing, trading, settling stocks directly on blockchains. It just further illustrates this growing trend. Asset tokenization, blockchain integrating into established finance.
Then there's the huge news, Coinbase acquiring Deribit. $2.9 billion. That's a major consolidation in the exchange world.
It is a significant move. And the Presto brief adds some context. Coinbase's Q1 2025 revenue was slightly below estimates, and EPS missed forecasts pretty badly. So this acquisition could be a strategic play for Coinbase. Diversify, get a strong foothold in derivative, maybe offset that recent earnings performance.
Even Meta is reportedly exploring stablecoins to reduce payment costs. It seems like everyone's looking at digital currencies in some form.
It shows a growing recognition of the potential efficiencies the cost savings stablecoins could offer, even for huge tech companies.
On a more serious note, Celsius founder Alex Mashinsky sentenced to 12 years. Prison for crypto fraud. That sends a clear message about accountability.
It absolutely does. The sentence, highlighted in the brief in Cointelegraph, underscores the serious consequences of fraud in this space and the increasing legal scrutiny on industry leaders.
The market brief also gave us that snapshot of top gainers and losers. Virtual, Brett, Pepe up, Kito, Pepe SG, BDX down. Constant reminder of the volatility.
Absolutely. These short-term swings really highlight the often speculative nature of many altcoins, the rapid shifts in sentiment.
Over on Reddit, there was talk about a DTCC patent showcasing XRP and HBAR for real-world asset tokenization, estimated potential, $2 quadrillion. That's astronomical.
It certainly speaks to the immense potential seen in RWA tokenization. And the fact that major players like the DTCC are looking at leveraging blockchain is significant. Mentioning XRP and HBAR specifically suggests they're seriously considering those particular blockchains.
And XRP seems to be seeing some real-world adoption, too. Logistics Health planning to integrate it into their payment infrastructure.
Yeah, that's a tangible example. Crypto being used for practical payment solutions in a specific industry, moving beyond just trading and speculation.
There's also that rather unusual and concerning story from Cointelegraph, the Zerbro developer who live-streamed an apparent suicide, reportedly being alive.
Yeah, that was surprising. And unsettling. It's a stark reminder of the human element and how quickly misinformation or misinterpretation can spread online, even in the crypto community.
Reddit users also pointed out an increase in flows into crypto ETFs, which aligns with what Jeff Kendrick was saying about institutional interest. Seems that trend is continuing.
Yeah, this sustained inflow suggests a growing appetite from institutions, maybe more retail investors too, wanting exposure through these regulated, easier-to-access vehicles.
And activity on Ethereum's Layer 2 scaling solutions apparently booming. Big year-over-year surge reported on Reddit.
The reported 516% increase.
Yeah.
And base hitting those high gas usage figures, it clearly shows progress in scaling Ethereum, improving transaction throughput. That's crucial for broader adoption.
We also saw reports of an ancient Bitcoin whale, an early adopter moving a huge amount, $207.5 million. At a massive profit. Always fascinating when those early guys surface.
It really is. These movements remind us of Bitcoin's very early days and the potential for huge long-term gains for those who held on through all the volatility back then.
On a more troubling note, 2 Florida teenagers arrested, $4 million crypto-related kidnapping and theft. That's a stark reminder of the darker side.
It's sobering. Like any valuable asset, crypto attracts criminals. It just underscores why vigilance and robust security are absolutely paramount for everyone involved.
Dogecoin also had a surge, and Bitcoin nearly hit $104,000. Amidst renewed risk-on sentiment, The meme coin market isn't dead yet, it seems.
Well, despite some earlier Reddit sentiment suggesting the dumb money was drying up, retail interest waning. This recent surge shows speculative trading can still drive significant price moves, at least in the short term.
Now, Crystal Intelligence provided a rather sobering overview. The largest crypto hacks in history. The scale of these thefts is just staggering.
Indeed. The list, topped by that, reported $1.4 billion theft from Bybit this year. It really highlights the vulnerabilities centralized exchanges have faced.
Yeah, Coincheck, FTX, MGOX.
Huge numbers.
Huge numbers. It underscores the critical importance of rock-solid security measures. And it's not just the amounts, right? It's the recurring patterns. Phishing, private key leaks, insider jobs. The attackers keep evolving.
Crystal Intelligence emphasized that. The continuous evolution of attack methods, increasing sophistication. But they also pointed to growing cooperation between exchanges, analytics firms, law enforcement in responding to these incidents.
That's something, at least. The report also mentioned FinCEN targeting Huobi. For laundering $4 billion in crypto, that's a massive enforcement action.
It certainly is. It highlights the ongoing efforts by regulators to crack down on illicit use and the potential scale of money laundering that can happen in the digital asset world.
Finally, that Presto research brief included an upcoming events calendar, some potentially market-moving dates, U.S. budget balance, CPI, PPI data, even a dinner with Trump.
Yeah. Never a dull moment.
Seriously.
These upcoming events, macroeconomic data, political developments, they all have the potential to influence market sentiment and therefore crypto prices. Staying informed is crucial.
Let's briefly touch on stablecoins. The market brief gave a snapshot of the top ones by supply.
Right. As of that brief, USDT on Tron has the biggest share, 30.1%, about $73 billion. Then USDT on Ethereum at 26.3%, roughly $64 billion. And USDC at 25.1%, around $61 billion.
Any interesting shifts recently?
Yeah, USDT, Tron, and DAI showed positive growth in supply over the past week, while USD Ethereum and USDC saw slight decreases. FDUSD also showed notable growth. Things are always moving there.
And finally, a quick update on DeFi activity. Top gainers in total value locked, TVL.
Over the last 7 days, the top gainers were Solve Basis Trading, Satoshi Protocol, Echo Bridge, Anemoy Capital, and Centrifuge Protocol, all showing significant percentage increases. But the big players by overall TVL where the most capital is locked remain protocols like Avi V3, Lido, WBTC, EigenLayer, Binance Bitcoin.
Okay. We also have some data on Bitcoin's correlation with traditional assets. What's that relationship look like right now?
Well, the correlation between Bitcoin and things like the S&P 500, NASDAQ, gold, it's not fixed. It fluctuates. Depends on broader market conditions, investor sentiment. The charts in the Presto brief would show how aligned Bitcoin's price movements are with those traditional assets at this moment. Sometimes it's strong, sometimes weak.
Okay, so to recap, we've seen Bitcoin reclaim 100K, maybe driven by dollar weakness, institutional interest. But public conviction still seems, well, developing.
Right.
Ethereum staged a big rally, but spot ETF demand is kind of tepid despite its strong tech. The regulatory environment is getting clearer globally. U.S., other places putting new rules in place, thinking about future frameworks.
Definitely becoming more defined.
And the market's still dynamic. Big acquisitions, TradFi getting more involved, and that ever-present risk of huge hacks. Stablecoins are key. DeFi keeps growing in spots.
Precisely. And we've seen that whole range of predictions for Bitcoin, from $1 million down to more measured views based on adoption speed and the regulatory landscape. Still evolving. More changes are definitely coming that could significantly impact the whole market.
So here's a final thought for you, the listener, to consider. Given these contrasting forecasts for Bitcoin and the ongoing evolution of regulations worldwide, what do you believe will be the single most influential factor, the one thing that determines the long-term success and widespread adoption of cryptocurrencies? It's certainly a complex picture we've explored in this deep dive.